Hello, welcome. My name is GK. Today's question is explain me share market in simple terms. So let's start. We'll talk about market. What is market? Where you buy something and somebody sells something. For example, you go outside to buy fruits. So you want to buy fruit and somebody is selling fruit. That means there is buyer and seller in the market. Now we will say share market. That means somebody is buying share, somebody is selling share. So buyer and seller is there for shares. Now what is share? Okay, somebody is selling share, somebody is buying share, but what is share? So you can think it like any entity or any object which can be purchased virtually. So there is a price of share, like there is price of fruit, there is price of biscuit, so there is price of share. So there are different kind of fruits in the market, different kind of biscuits in the market. So same way there are different kind of shares in the market, or some people call it as stocks also. So shares are also called stocks. So somebody is buying stocks means they are putting some money as a buyer, and somebody is selling them, that is getting the money from them. But why this is needed, why this happens, and what happens to money? So let's take very simple example. You have a company name is ABC Corporation, for example. So company has a business which is of, let's say, 1,000 rupees only. They are selling chocolates daily to people. So they are preparing chocolates of 1,000 rupees daily, and they are selling it to users, and users are consuming those. And their manufacturing processes in the house itself, where they are staying, there are only two people who are preparing chocolates in the house kitchen itself and selling it. So after some time, what happens, people used to like their chocolates. They say, okay, I want to buy more. So maybe after 1 month there will be demand of 2,000 rupees chocolate, then 3,000 rupees, as their customer grows. But after some time the demand will reach to a level that the person who was preparing those chocolates needs help to make more chocolates, because there is a lot of demand now. So to meet that demand, they need to have money also. Let's say there's an order of 1 lakh chocolates, just a simple hypothesis. Let's make it 5,000 chocolates for an event. 5,000 chocolates of 10 rupees, that means 50,000 rupees order in single day. So how that person will make if there is no capacity with him? He does not have a raw material to prepare chocolates, no packaging material available with him. So the same thing is in stock market. If there is a company who is making chocolate and they need money to grow their business, so they will launch some stocks or shares as a partnership in the public. So what is meaning of that is, if you want to grow your business, it is not the actual case, but just giving you example to understand stock market, that okay, somebody wants to get money to grow the business, then they will launch their stocks, they will go public. Public means whatever their profit will be, it will be shared with the partners. So who will be partners? Public, normal people who will be buying the shares. So that means they will be a kind of partners in their profit. So earlier they were selling the chocolates, the whole chocolate profit was coming to that person only. But now whatever chocolates he is selling with the help of money of the people, the profit will be shared in the form of dividends or in the form of stock growing daily. People will get benefit. If you are buying the stock in 10 rupees, it may become 20 rupees. I will talk about that, how it is growing, what is the process which takes the stock price higher or lower. But whenever the company is growing, the stock price will grow. So stock market overall is nothing but a buyer seller exchanging stocks. And why company is selling those stocks? Because they want to grow their business. They come from private uh, entity to public entity. Private means initially they were making the chocolates in their house. Nobody was knowing the process. Nobody was knowing from where that person is bringing the material, how much he is spending on raw material. Maybe he might be purchasing the raw material of chocolates for 200 rupees and packaging for 50 rupees. So 250 rupees was his cost and total selling was of 1000 rupees. So 750 rupees profit he was making daily basis. But now when company goes public, people buy stocks, they have to show everything to them. Okay, this is the total sale of the company, this is the net profit, so that other people knows about it, because everything is now public. And everybody who has the stocks, they are the partners, a kind of partners you can say. Now in what terms you will be called as partner of the company? You will be partner in the profit and in the loss. If stock price is going higher, you will be like getting a reward on your investment. For example, if you bought a bought any asset, house or something, if price is going higher, so your net worth will increase. Similarly, if the property price is going down or the house price is going down, your net worth will reduce. So same thing is with stocks. If you bought a stock in 20 rupees and it is going higher, it is becoming 50 rupees, then your net worth is increasing. But if company is in loss or going into loss, there are competitors launched, they are giving challenge to company, or due to XYZ reason company is starting getting loss, so in that case stock price will reduce and your net worth will also reduce. So okay, we will come back again. We understood now what is the stock market by combining two words, stock plus market. Market is just exchange of any goods like fruits, chocolate, biscuits. So we combine it with stock. Stock plus market is exchange of stocks between buyer and seller. Now there would be a curiosity in the people who are like new joiners or who want to learn about stock market, that who is the seller and who is the buyer, from where does it come? Because in physical world, whenever you go outside, you see a shop from where you are purchasing fruits or chocolates. So that is a seller for you and you are the buyer because you are buying it. But in stock market, where do you see those, like who is selling you? There is no shop like that. So to understand simply, there is a mechanism to buy the shares, sell the shares. Everything is a kind of a mechanism in our life. For example, you are buying chocolates, you follow a process, like you're going to shop, you're handing over money, then bringing back the chocolate. So same thing is here. You will place some order to buy the stocks. Okay, I want to buy this company stocks. So the order will go to exchange. So when you want to buy something, your order will go to exchange, and then there will be seller in the exchange also who wants to sell it. So one person want to sell, another person want to buy. Exchange will have some calculations criteria. Based on that, you will get stocks in your account, and other person will sell it. He will get the money for that. So there will be a lot of buyers in one side, there will be a lot of sellers in one side. Think like people standing in one row. They want to buy fruits, they are standing in one row, and there are sellers in one row who are selling fruits. Five, there's a person with 5 fruits, other person with 10 fruits, and here are people with different I will say number of fruits they want to buy. Let's say he wants to buy 2 fruits, here 5 fruits are there, so this person will take 2 fruits from him, and he will go, okay, he say, okay, I have 2 fruits now, I am a buyer, so this will be left with 3 fruits. Again new buyer will come, he will place order, then it will keep on going. So exchange will take care of it. This complex mechanism, you just place your order for buying or selling whatever is. So nowadays you see mobile apps, websites from where you can buy and sell stocks. And of course a little bit about brokers. You cannot directly place order to any exchange. So there are, I will say, mediators or certified uh, organizations with whom you can trust. Okay, so you give them order, they will take your order to exchange, and then mechanism will happen of buying and selling. So for simple example, if you are a buyer, you will place your order to some broker or an entity which is recognizable or registered with the exchange, and then that person or entity or organization will take your order to exchange. So it happens in real time these days. Whenever you want to buy, you can see where my order is. So it is very fast because of digital technology. So stock market is not the latest concept of last 4 or 5 years. It's not like that. Previously also it used to happen when digital buying or selling was not happening, or the systems were not there with the people who were having mobile or computers. So you need to fill a form, some kind of form, that I want to buy. Then you need to follow a process, physical process basically. So in those cases results were not like so instant that okay, you submit a form to a broker, he will let you know quickly, like a digital system. So overall, what you understood, you place order. Now to place order, you should have some money, because you are a buyer, right? If you want to buy fruits, you should have some money. So whenever you want to buy, you should load some funds, or you should have some funds. So if I talk about digital buying these days, if you're buying, you will be downloading an application on your phone, then you will be adding some funds into that application, mobile application or website. Add the funds from your bank account, let's say a kind of wallet. Then whenever you are placing order, that based on your investment, that fund will be deducted from your wallet, and stocks will be coming to you in your account. And same thing when you are selling the stocks, it will be sold, money will be coming to your wallet or account with the organization, and then you can withdraw that money to your bank account. So it is like a flow of money coming from buyer from his or her bank account, and for seller also, whenever he sells, he can withdraw money to bank account. Not instantly, I will say. Withdrawal is not instant. Mostly it takes little bit of time, because there are some checks for security reasons. But for buying, I will say it is very, very instant. You load fund, you want to buy right now, place an order, it will be instant. Fund for seller, it will be instant selling, money will be shown in the wallet, but withdrawal process or validation process is there for security reasons, which is good, I think. Okay, so if you want to learn more about types of buying and selling, that is also possible, but overall agenda of this session I already covered to make you understand what is the stock market. So I can talk about more types of buying and selling. If you're interested, you can listen. There is kind of intraday buying and selling. So intraday means all things should happen in one day itself. One day means when market opens, the time when market opens and the time market closes. So there is a duration window. Let's say market opens at 9 a.m. and then closes at 3:30 p.m. So there is window of 6 hours 30 minutes. So in intraday you have to become a buyer and then you have to become seller. Means you have to complete the transaction. That is intraday. If you don't complete the transaction, system will do the counter transaction with respect to you. For example, if you already bought something and you're not selling, system will take care of that. System will place order by some rules and something. So intraday is like a risky one because you have to decide both decisions, buying and selling, in a single day. So that's why it is not called investing, it is called trading. So whomsoever does buying and selling daily, it becomes trading. So you will hear this term trading. He is a trader, he is not an investor. So investor is basically long term. You are buying something, like you are buying house today, you are not selling it today itself. You may keep it for multiple years, kind of investment, long term investment. So some people buy stocks, after buying they keep it for a long time as per their decisions, by seeing that okay, this company will grow in 5 years. Let's say there's a company who makes paint, wall paints. So people will think like that, okay, this is a paint, where it will go. Paint has to happen, right? All the road corners has paint, walls has paint, mall has paints. So paint will be there always. Vehicles has paint, car interior exterior whatsoever material uses, it uses paint. So paint company is making paint, so demand will grow. So people can think, okay, stocks will grow because a lot of demand will come. When population increases, a lot of people will make houses also, so there will be demand of paint, so they can keep the stock in their account, they won't sell it. And later after 5 years, when company is growing, they will decide, okay, this is a good time to get the profit. So there is a chance of multiplication of money in the long term. So here, that's why in a single sentence it is said that by a very wise person, share market or stock market is a way to transfer wealth, or let's say money, wealth or money, to patient person, patience person who is having patience, from the person who is not having any or having less patience. So it is a kind of mechanism. It is told by some wise person that if you just buy something and it goes a little bit down and you are shaken up, oh, I bought it, it is gone down, I have little bit loss. Don't worry, if your vision is longer, you have some analysis done, then you keep it hold. in longer term it may give you good profit. So basically market uh, plays a lot of the people who does intraday, means daily buying selling buying selling buying selling, because market is very very smart, it is very intelligent, it evolves. So now another interesting topic I'm covering, although agenda was what is stock market, but just to talk about, whenever you place an order in uh, exchange to buy something, there is somebody counter to you, means somebody is selling the stock, right? That's then only you can buy. For example, if you want to buy chocolate, somebody should be there to sell the chocolate, then only transaction will happen. So the general uh, I will say most of the people, it is like uh, record, I will say, or it is a calculation which is there, that most of the people in stock market has losses, few percentage makes profit. What it means, around 90% people make losses, and it could be very 95, somebody says 95% makes losses, I'm just taking example, 90, approximately 90% people will make losses, so profit is going to 10% people only. That means 90% people who are getting the loss, their money is being transferred to 10% people. So that's why I said stock market or share market is a mechanism to transfer money from person having less patience to a person who is having patience, because it checks a lot of things, it tests you, a lot of up and downs happens, so you should be having some analysis and decisions, and you should trust if you are an investor. And intraday is a different kind of mechanism, you have to have very I will say sharp skills to enter, I mean to place order on right time and place order for exit also. Exit means I'm saying, simply saying selling for now. Entry is, let's say, buy, although reverse also happens, but I'm taking it simply. Entry means you're buying something and exit means you're selling. Some people use this term entry exit. So in intraday you have to do buy and sell both in a single day, so you have to find a point, okay, from this time I'm buying, let's say at 11 a.m. I'm buying, I did not buy at 9 when market open, I'm just thinking now at 11 a.m. from here market will go up definitely, so let's buy. Now 11 a.m. you're buying, then before the market is closing 3:30 you have to sell it. Okay, 3:30 is just an example of market closing, you can check it whenever you do the transaction. So you have a little time window, in that only you have to decide. And remember, there is somebody who is counter to you. When you are buying, there is some seller, so if you are getting profit, that means somebody is getting loss. That's why I said it is a mechanism to transfer money. You bought some stock at 50 rupees, it became 55, you got 5 rupees profit in few hours. So where did that money come? And let's say you bought a quantity of 100 stocks. One stock is of 50 rupees. 50 into 100 stocks, you invested 5,000 rupees in intraday, and the stock reached 55 rupees after 2 hours, so it become 100 stocks into 5500 rupees. So in 2 hours your 5,000 rupees become 5500 rupees. which is around, I will say, 10% profit. So in 2 hours you are getting 10% profit, which looks sometime very easy to make. People say, okay, I made it. Yes, but if you keep money in the bank, or if you keeps money in some very less risky schemes, or uh, entity where which gives you return with security, so you will get only 4%, 5%, maybe 3%, 6% annually, once in a year. And here you are making the money in 2 hours. So this gives some time, uh, confidence booster to intraday person. So person, I am not saying, I will say trader. Good terminology to use is trader. So person who is doing intraday, daily buy sell buy sell, it gives confidence or booster. Oh, I made 10% in 2 hours. This is very easy. Why I will put money in some other bank or some security? It is quite easy. But the lesson in the market is, when you win something, means when you have profit in intraday, there's a person who lost money. There's something against you. So let's say market is lost. Market is giving you that money. So market has lost that money and it has given you profit. So I'm not saying there's some person you are getting money from that directly, but we are saying, okay, you placed an order in market and market gave you profit. You invested 5,000 and after 2 hours it became 5,500. So people say, okay, I earn 10% from market in a day. But it's not that easy. The overall win is in seen in long term, how many trades you are winning. So if you have some colleagues, or if you have some people who says, okay, I got profit, so there are cases you can ask, like, have you ever withdrawn that money by having profit? Did you use that money? Did you use the profit money somewhere? So it is well said that mostly for intraday person, you can have profit, but it is difficult to withdraw that money. Difficult not in the process, like your human intention, human tendency gives, or gives you confidence to make more money, more money, more money. So then intraday trader try to make more money, so there will be chance of losing also, because intraday is a process where person should have very very sharp skills, perfect entry time, perfect exit time to make profit. So it is like expert kind of trading, I will say. So initially, if somebody wants to learn stock market or share market, I will recommend go for very very small quantity. Let's say start with one or two quantity of any stock of your choice, which fits in your budget and does not matter even if that stock becomes zero. You bought it at 100 and it became zero, does not matter to you, so that you can see or you can learn about patience. It is very very important. Money will come, profit will come definitely in long term if your choice is good for stocks, but patience will not come. It is not come from any screen or website. It is your internal thing. So in stock market, if somebody wants to be in profit for longer terms, the key is patience plus your decisions, what you have invested, in which stock you have invested, with patience. Because in the time time, with respect of time, good stocks, the company who are like king of their sector, they will also come down. It's not like uptrend always. There is bigger energies in the universe which can bring down anything in a minute. You made a strong house, it can be strong with a lot of conditions. It can tolerate a lot of things: rain, air, snowfall. But you can't predict the overall uh, behavior of universe. So if stock market is universe, for example, there's earthquake, it can give damage to property or house which is not anticipated by a person. He says, okay, my house is strong, it does not happen. So same thing in stock market also. Some dips, rise comes, sometime good news come for a company. You will see within 1 or 2 days the wealth is grown so much which was not growing from last 1 year. There are companies who made AI chips, for example. There are companies who were making chips from last 5 years, but as and when demand of AI chip came, that company grown up like two, I will say 2 cross, 3 cross times in matter of days. So it depends on the time and the demand. For example of gold, if you see the price of gold right now, I'm recording this video, it is, I will say, in last 1 year it is grown so much which it did not grow in last 4 to 5 years. That means the thing which has some value and stable, the right time will come and it will go to height and it will give you wealth. So overall, stock market is buying and selling simply, and in order to make profit, there is a right time for investment you need to think of, and amount also, which does not pain you, give you pain in longer term. It will test your patience, because, and there's a right time to exit also. Exit means to book your profit. It's not like you can guarantee that okay, it is going up, going up, going up, it will always go up. So there's right time, you have to find it. I will talk about more in the next session, how we decide the right time, what kind of analysis people do. Okay, this is the time to book profit, I got 5 times profit, let's book. So what factors are there? So for today, the only learning I will say is, it is easy to place order, buy and sell. It's just clicks today. It's same for everybody. You fill the boxes of quantity and you load money, you will buy something. And you want to sell, you will sell something easily by clicking buttons. Only thing which is unique for the person who is making profit is patience. So use the combination of patience plus money. So your brain is designed by the God in such a way that you can take best decision for yourself. Thank you very much for listening. Have a nice day.